Hey traders, it's John Fortune here with this week's weekly Forex Forecast. Hope everybody's having a great weekend. Next week is setting up to be a big week. Why? Because we have FOMC out of the US next week, and it's right at a time as the S&P 500 is threatening a major breakout to the upside. So FOMC next week is likely to be pivotal in deciding as to whether this breakout is successful or if it fails on the breakout and catalyzes the next leg down in stocks. Okay, so quick look at the economic calendar because there are some key pieces of data we have to pay attention to. First of all, last week, we had this bullish catalyst out of Australia because Aussie CPI came in hotter than expected. And when we put this data into the scorecards, this did increase the score of the Australian dollar. And going into this week, I do think Aussie long plays based around this bullish catalyst and the fact that we don't have any interest rate decision out of Australia, unlike other currencies. I think Aussie long plays are probably going to be one of the best plays next week. The second thing to note from last week is the Canadian interest rate decision. This is important because although they raised rates, they did stress that they were going to pause and consider the effects of the monetary policy, the tightening that has already taken place. If they need to raise interest rates again, they stated that they will, but the Bank of Canada is now pausing interest rate hikes to assess the effects of its monetary policy so far. And of course, this is somewhat of a dovish tilt for the Canadian dollar, actually bearish fundamentally for the Canadian dollar somewhat. Coming into this week, and of course, there were other pieces of data out last week, but those were the key pieces of data we need to pay attention to heading into this week. And this week, in and of itself, in terms of economic data, we have ISM, these are all important, but it's the FOMC meeting on Wednesday, which really has the ability to move markets and even reverse markets. And it's not just the US. I mean, I expect the US dollar and pretty much all of the other currencies to do nothing more or less between Monday and this meeting on Wednesday. But after that, we also have a UK interest rate decision and an interest rate decision out of Europe. And at the same time, we also have non-farm payroll. So next week is a big week. It's likely to be a tricky week. However, I think with Aussie long plays and the ability to play some of these markets both ways, i.e. to the long side and the short side, so the ability to be reactive next week instead of predictive is going to be the best way forwards in terms of a trading plan next week. Okay, so let's have a look at the scorecards for the coming week, and the key piece of data here is the Australian dollar bumping up its score this week because of that hot CPI print we saw coming in last week, meaning what? The reaction function of the Australian Central Bank is going to have to be to do more to tighten monetary policy, which is bullish for the Australian dollar. We also saw the New Zealand dollar bumping up its score somewhat, and the Canadian dollar weakening after that Bank of Canada pause of interest rate hikes. And also the Japanese yen continue its decline because it was +3, then it went to 2, now it's at 1. And this is ever since the BOJ started to embark on that defense of the yield curve control cap at 0.5% we discussed in previous videos. And so going into this week, I do think the Australian dollar long plays all in all are going to be the best opportunities, especially as we don't have those interest rate decisions out of Australia like we do with the euro, like we do with the pound, like we do with the dollar. Now, there is a dilemma heading into next week. What is that? The dilemma is the dollar is the weakest currency, so dollar short plays are, based on the data we've got here, going to be the best plays heading into next week. And these markets are actually structured for risk on. And, you know, that's euro dollar to the upside, pound dollar to the upside, Aussie dollar to the upside, Aussie yen even to the upside, pound yen, euro yen, euro franc to the upside, pound franc to the upside, Aussie franc to the upside. These are all risk on plays. Now, the dilemma is that we have the Federal Reserve meeting, and if the Fed tanks stocks, US stocks next week, we could actually see risk off coming into the market. So these setups could be reversed. That's the dilemma we have. And so going into next week, the way around that is, instead of to try and be predictive and say we want to be dollar short, we're going to be looking at markets which we can trade in both directions. So we can trade them on dollar weakness or dollar strength. And the key next week is going to be trying to be reactive, especially post FOMC, as opposed to being predictive and trying to guess what the effects of FOMC will be on these markets. Okay, so quick look at the S&P 500 before moving on to the individual currencies, because this is a market you need to be paying attention to next week with FOMC. Why? Because whether you're a Forex trader, commodity trader, if we get a big move higher or lower, we get volatility in the US stock market, this has the ability to bring with it risk on and risk off sentiment all throughout other markets. And with FOMC next week, we're probably almost certainly going to see volatility in the US stock market around this piece of news next week. So last week we talked about the fact that we had a double top reversal, should be considered a one wave technically, and we have a potential what should be considered a second wave. Now this remains the case. However, what tends to happen, especially around major news events, and it's very uncanny how this happens, but what tends to happen is markets will enter major breakouts around these news events very often. And very often, once they break, they will just kind of sit at major breakout levels. And then when the event takes place, that tends to be the catalyst as to whether the breakout succeeds and you get what would be in this case a wave 3. If we break here with momentum, that would be a wave 3. Now the macro backdrop overall doesn't, in my opinion, fit with that. I think what's most likely is we see stocks coming down low and we get risk off. However, Powell has a history of trying to be hawkish and basically bumbling a bit, and the market ends up rallying. So even if Powell comes out and tries to be hawkish, as I expect he will next week, there is no guarantee that this is going to tank stocks and send the dollar higher, because he has a poor track record of actually being able to do that. Only in Jackson Hole, when he pretty much got max hawkish, was he able to do that. Otherwise, the market kind of discounts what he says. So going into next week, the break of the double top, which I think is coming ahead of FOMC, this is going to be the key area to watch, because once we break here, this is cannot be considered a wave 2 anymore. It becomes then a question of, is this a 1, this is a 2, and this is a third wave for a new bull market? Or is there a failure on the major breakout and this turns out as an A, a B, and a C, and then of course you get your next leg down like this? So that is the key decision that's likely to take place next week on FOMC. And if we get a break higher with momentum, this is likely to bring risk on into markets. And if we get a break lower because we fail, Powell does manage to come out and drive markets lower and be hawkish and send a hawkish message, then this is likely to cause risk off even in the currencies as well, and potentially even the commodities. Commodities slightly less affected by this, but certainly currencies are affected by risk on, risk off sentiment in the major stock markets like the US. Okay, so quick look at the individual currencies before moving on to the pairs that I'm looking at on my watch list for this week in the Forex complex. With the dollar, we haven't really done anything for the last 2 weeks, so there's no real update here on the bigger picture outlook. And this is really the same for most of these currencies, because as the dollar has hardly moved over the last 2 weeks, so too have a number of these currencies not really moved either. So going into next week, what is interesting is the fact that we are slightly below the 7 and 2 year breakouts. And if we get a hawkish Powell and he does send the dollar higher, we could see a close back above these levels next week, and that would potentially signal a bottom here. And in the bigger picture, as I've said in previous videos, nothing more than just this kind of a candle and testing the 7 year breakout, 2 year breakout, and then starting to reverse higher. So really a big week, not just for the S&P 500, but also the dollar. And that FOMC next week really has the ability to change these markets around and catalyze the reversals that we've been discussing potentially in the dollar, in the S&P 500 in previous videos. Next is the euro. Euro also above the major breakout levels here, but look at this, the euro's just kind of V-bottomed here. I mean, this is a sharp short covering rally, and the problem is these markets, they can't just move in a straight line forever. And especially with the overall macro backdrop here, it does look like we could be coming towards the end of the road, at least short term in the euro. And I would not be surprised again, whether it be FOMC next week or even the ECB, I would not be surprised to see this start to sell off next week. So with FOMC and with the ECB next week, these euro pairs are a little bit risky because they're liable to bring volatility. So just bear that in mind. Next is the pound. I did highlight in previous videos how we tested this major Kiev resistance, and we've struggled to break this, and we're sitting right here. So again, is this now breaking above this major area of resistance, testing and going to rally higher? Or do we fail here? This is another market, as you can see, which is right at an area where it could go either way. And with FOMC next week, again, this is why I think FOMC is going to be decisive, very likely, in a number of these markets as to whether these breakouts continue or they fail and catalyze the next leg down in these markets. Next is the Swiss franc. Just a quick big picture look at the weekly. I do think the Swiss franc is coming up to this area and potentially higher this year. However, we've really just retested. We broke through this major double bottom. We've retested on the weekly and we're kind of going nowhere. I mean, look at this week over here. 1, 2, 3, 3 weeks, we've gone nowhere. So we could very well see the Swiss franc continuing lower. This is kind of a range bound market. It's not very strong, although I do think the potential for Swiss franc strength this year as we get through the year is very, very real. This is a market to watch to the upside this year. But right now, going into next week, perhaps not so much. I do favor some of these other markets against the Swiss franc going into next week. Next is the yen. Inside week last week, so no real change from the outlook last week. I do think we could come up and retest the major breakout level over here at the 0.007945. However, this market is kind of bullish to neutral. In fact, the scorecards are reflecting what we're looking at here technically. A slight move higher and then a kind of consolidation. It's exactly what you'd expect from a +1 score in the scorecard. So neither here nor there for me, the Japanese yen, but keep an eye out for this major breakout level, a test of this, and see if the price action starts to change around this area off the yen pairs as it currently stands next week. Next is the CAD. We are getting a little bit of strength coming into the CAD, and I highlighted this potential A, B, C bear flag in last week's video, looking for this market to come up into this area, and then I do think we see the next leg down in this market. As it stands going into next week, the CAD is -3, so even if we get a little bit of strength, I do favor this to the short side relative to the other currencies, especially the Aussie that we're going to be looking at. Next is the Aussie. We have pulled back and tested the previous high over here. However, we do have strength, and in the scorecards themselves, this is projecting further strength. The only problem with the Australian dollar next week is if the US dollar rallies and we get risk off, the Aussie dollar is likely to suffer from that because it's one of the most risk on currencies. So again, we have this dilemma where risk on setups are the best setups, but they could be reversed on FOMC, in which case we may need to be looking at pivoting to risk off post FOMC. So that is really the state of play going into next week. And finally, the New Zealand dollar. Again, we've had this very, very sharp rally. I do think this peters out somewhere in this area. I've been saying this. I don't disagree. We could have some near-term strength, but it looks like we're coming towards the end of the road for New Zealand strength. And FOMC next week does provide the perfect potential catalyst to reverse this. As it currently stands, risk on still in play, but post FOMC we may need to switch to risk off. Okay, so let's have a look at the markets for the coming weeks, starting with crude oil. Now, I do not have a strong bias on crude oil. It's not one of my favorite markets. However, on balance, I am kind of bearish to neutral on crude oil. So we do have the makings of potentially a double top over here. I'm not sure if this actually tested the high. However, you can see we do have a bit of momentum. So any pullback in this market next week is viewed as an opportunity to potentially look for shorts, although again, not a strong bias on this market. And I'm going to be looking down towards roughly the 75 area. Next is Aussie CAD. Now, Aussie CAD is one of my favorite markets going into next week because of that dynamic of the hot CPI print out of Australia, fundamental bullish catalyst, and the Canadian interest rate decision whereby the Bank of Canada paused interest rate hikes, basically a dovish kind of tilt, dovish pivot for the Canadian dollar. So going into next week, I really like this as that fundamental play. And also the technicals are great because we have momentum with a potential bull flag. So any pullback in this market is viewed as an opportunity to look for long positions, and they can be short-term positions, or you can look to hold to the targets. You're not always going to get all the way to the targets because the markets don't always have that level of volatility. But I am going to be looking for bullish setups, and I'm going to be looking up towards the 95.80. If we get into this target area, that is where I'd be looking to be out, because the odds will start to turn against you above this area. Next is Aussie Franc. We do also have some nice momentum to the upside. We're starting to grind higher here, but any pullback in this market, any bull flag setup is going to be a great opportunity to look for long positions in this market. And if we can reach the 0.6630 area, this is where I'd be my absolute max at profit taking, and above here you're starting to get the odd turn against you once again. Next is New Zealand CAD. Now the New Zealand pairs here, they're not highlighted in gold because the New Zealand is only +1, and the reason that these are above the euro, for example, which is +2, or the pound, and even the dollar, which is -3, is because the pound, the euro, and the US dollar all have interest rate decisions next week. So they can do very strange things, and they can either correct and do nothing and then move on those interest rate decisions. It makes it harder to predict in advance what they're going to do. Whereas the New Zealand pairs, yes, they're not as bullish as these other markets, but they don't have that interest rate decision or that event risk heading into next week. So any pullback in New Zealand CAD is viewed as an opportunity to look for long entries in this market. And if we come all the way up, let's say the previous high, this is where I'd be looking to be out as a kind of max profit taking area. Next is New Zealand franc. It does look like we may have an A wave here, but any continued pullback is what's necessary here, because a pullback in this market is going to provide better risk to reward. And I'm going to be looking at long positions. And if we get all the way up to the 0.6050 area, this is going to be where I'm going to be max booking profits on this pair. Okay, so let's have a look at the currencies which were projected to outperform or underperform. Bear in mind, a quick note that the interest rate decisions next week can change the scores of the currencies because it's the macro data that fixes the scores. So the scores don't predict interest rate decisions. Interest rate decisions can change the scores. So with that said, I do want to go into next week with the ability to be reactive as opposed to predictive, which is what we normally try and do with the scores. And this means the ability to play these markets essentially both ways. So starting with the dollar pairs, if we get a correction into FOMC and then we get dollar weakness, I am going to be looking at Aussie dollar up towards the 0.7225 area. The second market next week based on dollar weakness is euro dollar. If we start to correct and then on FOMC we correct into FOMC and we get dollar weakness, I'm going to be looking for potential long plays in euro dollar up towards a max area, let's say roughly of the 1.10. Now the next two pairs are based on dollar strength. If we get dollar strength from FOMC, any correction in this market into FOMC and then a rally, this is a market you could start to look for potential long opportunities into the 0.9320 area. And the fourth and final dollar pair is US dollar CAD. And again, if we start to sell off in this market and then we get dollar strength, because the CAD is one of the weaker currencies in the scorecards, this is a market I would be looking for potential post-FOMC dollar strength plays into the 1.3450 area. Next to the euro pairs. Now with EurCad, this is focused on euro strength, as is euro franc. Any pullback in this market, potentially even into ECB, but maybe just into FOMC, because FOMC will affect the euro as well. Any pullback and a break higher is going to be viewed as a potential opportunity to look for long plays into the 1.4600. Now we came up and took out the bottom part of this target to the pip almost last week. Going into this week, we are forming a bull flag, and this is the second euro pair to the upside. Again, being reactive, if we pull back and we start to get a break higher, that is your opportunity to look for long plays into the 1.0120. Now what normally happens is if you're going to get euro weakness, let's say, you won't see a breakout of this channel next week. You will not get that bullish momentum and then a consolidation for the next play higher. What will happen is the market will tend to most of the time just consolidate and then at some point probably just fall out of bed like this. So it's waiting for that initial break higher. If you're trading this intra-week, that is what you want to be reactive to. And the final euro pair is EurAusd. This is based on euro weakness, perhaps post FOMC or post ECB. pairing it with the Aussie, which is my favorite long. Any correction in this market, perhaps into FOMC or ECB, and then a reversal lower, that is your sign momentum precedes price to start to look for further declines down towards the 1.5100. And finally, the pound pairs, the first two based on pound strength. Any pullback in this market, perhaps into FOMC or even further out into the UK interest rate decision, you can look intra-week for that reversal higher, and then that will be the opportunity to look for longs into the 1.6700. Pound franc didn't really go anywhere last week. We've been consolidating, as you can see, in this area. So if we do pull back in pound franc and then we start to get a break higher with momentum, that is your opportunity intra-week to look for a pullback into the 1.15250 area. And finally, if we get pound weakness, that ability to react to pound weakness. So if you are looking for pound strength and it doesn't materialize, and again, instead of breaking higher, these first two markets just sell off, what we'd be looking for here is pound Aussie. Any correction in this market, look for, as these two markets fail, look for that potential reversal in this market, and then any pullback down to the 1.7200 area. Okay, so wrapping up the video with gold, silver, and Bitcoin. Starting with the gold-silver ratio, we are overall in a downtrend, but we've had a big rally and we're kind of consolidating. So I don't go into next week really favoring one over the other. I do, on balance, prefer gold. However, both gold and silver I am bullish on heading into next week. Starting with gold, we've had some big moves up in gold and silver, and any pullback in this market, we kind of just moved sideways recently. Any pullback is viewed as an opportunity to get long gold or take a long position in gold. And I'm going to be looking up to the 1970 area next week. You don't have to come all the way to this area. Again, you can take profits anywhere up to this area, but once we get to this area, this is my max profit taking, where above this the odds start to turn against you. Remember, with long gold and long silver, you do still have somewhat of that event risk next week with FOMC, because if the dollar strengthens, that is going to put downward pressure on gold and silver. So if we get a hawkish pow and the dollar rallies on FOMC, you might want to step aside from any gold longs or silver longs. Next is silver. This market has just been consolidating after a strong rally, and the target I'm looking for are these previous highs over here. So any pullback next week is simply viewed as an opportunity to look for long plays up towards the 24.50. And last but not least, we have Bitcoin. Now, Bitcoin had a very strong rally when we actually saw the Fed put a bit of liquidity into the markets, and they took some of that out last week if you look at the data. So I'm not a huge fan of Bitcoin longs in this area, but on balance, if you are trading Bitcoin, I would be viewing this as an opportunity to look for further advances up to the 24,650 area. So that is it for me for this week, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the room each day where I go through these markets and the setups that I'm personally looking at with members on a daily basis for over 75 markets in different asset classes, including stocks, bonds, Forex, and commodities. So if you'd like to know more about the benefits of GMT membership, why not check out the link in the description below and in the pinned comment, where you can get a 2-week free trial totally risk-free. So have a fantastic weekend. I'll see you all next week.